Yep. It's all good, man. Why are people any more fun? People aren't fun anymore. You know what I mean? How you tell a joke and people get upset? Where do we draw the line? Can you tell your mom a joke? Like, I'm a 90s child, right? So, your mama jokes are still good? I got a good one. You don't want to hear it? See? We're the fun. Fun left you too, man. Can't have any fun anymore. Yeah, it's you kids who ruined it. Hey, welcome to the closing beat, everybody. Happy Tuesday. How you doing out there? Your mama's so smart, she chose to invest with Jazz Wealth. How about that? Brought it back. I did a thing there. Hey, we're financial advisors here at Jazz Wealth. We like to be kind of goofballs. You ever think of like a jazz musician? They're really, really good at what they do, right? You have to be an incredible musician to play jazz. But they're kind of goofballs, right? And I've always sort of visioned myself as, well, I love doing what I do. I kind of, in this particular topic, I consider myself pretty smart, but I'm a bit of a goofball, so that's why we call it Jazz Wealth. Hey, anyways, if you want to join us, you can go to jazzwealth.com and check us out there. Do appreciate you hanging out. I was talking to a guy earlier. He said, what you say, get your dough straight, right? That's what you're always saying. What does it mean to get your dough straight? And I'm like, well, everybody's a little bit different. I mean, it depends on your life. And he goes, well, what do you think it means to get your dough straight? Do you have like a Range Rover, or do you do these crazy things? And I said, no, I'm a pretty simple guy. I drive a 41 Ford, and that's my truck. And I was like, I kind of joking with him, I'm like, success to me means that you can buy sunflower seeds pre-shucked, or whatever you call that, man. I can buy as many as I want, right? I can have many sunflower seeds already taken out of the shell for me. I think that's pretty damn awesome. I'm a pretty simple guy. Anyways, let's talk about the stock markets, because it was not a simple day, right? Woo, man. Reminds me of that song from SNL. I don't know, do people still like SNL? But where the guy's like, what's up with that? What's up with that? You know that one? You don't know that one? All right. Anyways, what's up with that? So off to the right, those numbers are real. The Dow, 2.5%, the S&P, 2.5%, 4% on the NASDAQ. That's after hours. It's worse, by the way. Let's go over here. After hours, the NASDAQ is down 700 points, right? That's about as much as the Dow lost on the day. When do you see the NASDAQ lose 700 points in a move? That's over 5%. So pretty nasty down day. That also puts it at new lows. Let's start with the S&P here, though, because there may be some good news here. And, there's always two sides to an equation. So the S&P, we came back down to this prior low. I had drawn this line back when we started pulling back to the halfway mark, and boy, did they not like the halfway mark. It's now down 12% year to date once again, but we're down 7% in just April. Just this month, we're down 7%. And in reality, in our notes from Jazz, that's an email that I do for clients every weekend, I pointed out that from Thursday at 10 o'clock in the morning to Friday, we were down 5.3%. In 12 and a half hours, we lost 5.3%. Think about that. Markets, that's about an average gain for the year. It fell 5.3% in just 12 and a half trading hours. And so now we're sitting down around 7%. For the month there, because of today as well. So that's the S&P. If you're looking around the S&P, bloodbath, right? If I look inside of here, you name it, it was down on the day. Some oddball names that were up, if you're looking. Waste Management, that comes from their earnings there. You're also going to find Republic Services, their competition, that was higher. Handful of oil stocks. Lockheed Martin added a few dollars, $3.20 there. HCA Health, it's earnings stocks. So you got stocks revolving around earnings that, if they were close, it looks like they did okay. Philip Morris, I guess, also was a little bit higher, but nothing impressive there. Everything else was down on the day. If you're looking at the NASDAQ, like I said, it's getting worse was getting worse after hours, down 5.3%. So essentially, the NASDAQ now has lost in one full day the equivalent of what the S&P lost last Thursday through Friday in those 12 and a half hours. So the NASDAQ breaks the S&P's record. I don't know if that's one that you want to break the record, but that's what you got. Also, it's a new low for 2022, and we're down almost 22% for the year. So now you got a 20% bear market in the NASDAQ there. This is, by the way, just the 26th time in history that the NASDAQ has been down more than 10% in 1 month with only 3 days left to go. There are 3 days left, if you didn't know that. Here's the fun stuff, and this is where it might be the good news here. So, historically, the last 3 days of the month, when an index is down 10% or more, tends to see really strong moves. That's the good news. The data behind that is if you look at the S&P 500, being down more than that, you have an average move of 1.51%, and it's positive over the next 3 days, 72% of the time. In other words, people attempt to buy the dip into the end of the month. The last 3 days of every month for the last 50 years, any day or any month, just take the last 3 days and then go the next month, take the next last 3 days, so on and so on. If you look back 50 years of doing that, the average gain in the last 3 days of any month is 0.08%. So massive outperformance compared to the average expected here. Now the S&P was actually positive. Where's my notes? It was positive 8 of the last 10 times. So the last time this happened, where we were down more than 5% with it 3 days left to go in the month, was in February of 2022. That's this year. And we gained in the last 3 days 3.51%. January 2022, you can picture it, right? You're looking in here, right here. This is the January right there. That's the last 3 days. We were up 3.81%. September 2020, right here, right at the end of the month. That's your last little push right there, the last 3 days. Look what happened. You got 1.96%. Anyways, if you go back 8 of the last 10 times, it was actually positive in the last 3 days of the month, right in there for the February one. Now, if you look, if we talk about the NASDAQ has had an average gain of 1.5% in the last 3 days after being down at least 10% with 3 days left to go. The average gain for the NASDAQ in any ending 3-day period of the month was 0.18%. What's interesting about the NASDAQ, if you look back, we go back almost 20 years now. If you look back since June of 2022, when the NASDAQ has fallen more than 10% in a month with 3 days left to go, the next 3 days is positive 100% of the time. So January, this would be the last one right there. You go into the last 3 days of the month, that move was 5.15%. And from there, you got to go back to December of 2018. It gained 1.2%, so on and so on. So all of that to say, it's nasty right now, but if you had to bet on further declines in the last 3 days, or you had to bet on a rally, looks like the odds are in your favor of getting some kind of rally, even if it's not quite average. The median gain was 1.94%. So even if it doesn't pan out quite that way, you're leaning towards a little bullishness there. Right. Anyways, let's go back over here and take a look. You got gold up 0.5% on the day, just coming off of being battered the last couple days there. You got bonds moving higher, finally. So our TLT position in office trades is doing well. Rates coming down a little bit as prices move higher. VIX, really, really weird day today. It adds 6.25% and sort of caught this ahead of time, if you're playing along or following along, but that was kind of interesting there. If we look around the market, that's pretty much it. Yeah, the Russell 2000 down 3%. That's a new low for them as well. And then if you look at the Dow, it's not quite to new lows just yet, but working on that. Bitcoin down 5.3% as well. So I want to point something out here real quick. I got to ask the question, is now the time to go all in on Tesla, right? What? That was actually my answer. Everybody's excited about what's happening, or seemed to be excited about what's happening. But I got the question about, hey, go all in on Tesla. Is now the time? You know, this is a great opportunity. The guy's taking over the world. This is probably who we should get behind. And so I just said, when has that worked? When has going all in on something worked to the point where it makes sense to take all of your money and go all in on something? Has it worked with Tesla? No. Well, if you did it when I got the question, you're down quite a bit and likely going to be down some more. Not that it's a bad stock. It's just, do you go all in on something like that? Think about all the other times that this would have been a scenario in the recent past where you think, oh man, I'll just bet heavy on that. That seems where I need to be. The last one I got was Google, Alphabet, going to do their split. I want to get in on the stock before it splits. Why? Because why? There's no data that shows that that's a good idea, or at least a great idea. They're also doing a $70 billion buyback. That was kind of cool. ARK Investments. Oh, man, love what this lady's doing. Should we get all in on ARK? I know a lot of people that did that. Did that work out? No. I mean, there's nothing wrong with having a little investment in something and taking a shot on something you believe in, but going all in on it? Nope, that wouldn't have worked. Bitcoin? Has that worked? Probably not for most of you. Pot stocks, did that work? Going all in? Remember when everybody was excited about that? And for that matter, the fake meat, right? Well, did that work out? No. Gold? No. That didn't work out either. In other words, don't go all in on a stock. What are we doing? Come on. This is your chance. You have the ability to use fractional shares and everything out there. Spread out a little bit, right? Meme stocks, that's another one. Web 3.0, metaverse. Does any of that worked out yet? Not at the moment. Maybe they do work out, but going all in is just signing you up for a whole bunch of stress. So don't have that mindset. That is really, really difficult there. You can have a belief, right, about something. And that's coming from a trader, right? My background is trading. So you can have a belief about something being good, but in no way do you go all in, right? Very tough. Anyways, let's take a look around the different sectors here, because I want to give you some of the good stuff. Do a quick snapshot for you. Consumer discretionary, even after today, that one joins the communication services, XLC, and the XLK as being in a downtrend. Those are your three sectors in the S&P 500 before today. They were in a downtrend there. They are all extremely oversold in the short term there. The most overbought stocks in the consumer discretionary space, by the way, would be Ross Stores. That'd be the most overbought. And then I believe Target. Yeah, although that's starting to pull back. The most oversold stocks are going to be CarMax and Starbucks, right? Even more oversold today. We look at consumer staples. Consumer staples is one of the three that are confirmed in an uptrend still, as you can see there. Currently, it's a bit overbought. XLE and XLU are the others that are still in an uptrend for the moment. But if you look inside of consumer staples, the most overbought stock is Kimberly-Clark, which somebody pointed out yesterday. I did not get a chance to short it, but that was a good call. That one and Coca-Cola. Also, most oversold stocks are going to be Warner Brothers, and continues to be one of the most oversold, and CVS, which is not saying a whole lot there. As for the strongest sector with the best pullback at the moment, that's your energy sector. In other words, it's the strongest year to date, and it's had a nice pullback. So if you're looking for new ideas to buy, and you want something that was already strong, you would look in that area. That's down to over 10% in just the last 5 days there. Still up 30% year to date. The most overbought stocks to watch out for, which are not a lot of them. Oops. Where did I put that one there? WLT. There we go. Not loading. All right, so I messed it up. And Cortera. We'll just go on to that one. Most overbought stock and most oversold, if you like them, are Diamondback Energy, ticker symbol FANG, and Schlumberger, right? Just in the short term here, oversold. They're not like really extended or anything. It's just they're the most oversold compared to the others. Lastly, we'll do the tech sector, which is very oversold here. Before today, you actually saw a slight uptick in the number of stocks above their 50-day moving average. All of that was erased today. It was 20%. We're back down to almost nothing again. And the tech sector is the most heavily weighted in the S&P 500, 27%. So any given day, if the tech sector is down, that's weighting 27% on the S&P 500. Most overbought stocks would be IBM, which started to pull back here a little bit today. Salesforce.com is one of the most oversold. ServiceNow, also very oversold. A little pricey, but a little oversold. And you got to put in PayPal as far as being oversold there. Just a fun thing to take a look at, because every now and then I like to cover the sectors. And I hope you like it there. We have new highs and, well, we just have new lows today. 0 new highs, 40 new lows, and all of them lost at least 1%. So you had 1% losers or more. Baxter is one of them, lost 3% on the day, breaking the new lows for the year, of course, 52-week lows. Verizon, nasty, right? After coming out of earnings, it continues to sell off, having some issues with subscribers there. JP Morgan, being in the financial category, is trying to get extended here, but it did make new lows. State Street, very much extended. I'll point that one out there. Very much extended in the short term, and that one also hit new lows. And then there was General Electric. There's a lot of them to look at. I was just looking for a list today that would be stocks that hit new 52-week lows and were depressed to the downside, right? So maybe overextended. So something for you to play along with. All right, stocks in the news here while I reset. What do we have? Whirlpool. Now, you look at stocks sometimes not because you're interested in the stock itself, but because you want to see, there's such a major player in the space, like UPS. We'll cover that in a second. You look at UPS as more of a barometer on the economy. You might not look at it and say, I'd like to invest in it. Right? Maybe you do, but I'm just saying, we look at Whirlpool for that exact reason. With their imports and exports, material costs, and obviously their impact on getting a glimpse into what home builders might look like there. It's a good preview of the home builder stocks, as well as the ISM manufacturing numbers, right? Because they're a big manufacturer of, Whirlpool products there. So basically what we saw today with Whirlpool is when the ISM manufacturing numbers come out, you'll actually now see a little uptick. So it's actually going to be good news when that, I think it's next week that it comes out, because of what Whirlpool said and how much they play into all of this. They beat on earnings, but with lower sales than expected there. They lowered their guidance due to inflation and supply chain. That was mentioned numerous times throughout that there. But why did the stock go higher? It was exactly what we talked about 3 weeks ago, where stocks that do well through this earnings season are going to use the words pricing power, meaning they saw their costs go up. Their margins obviously were going to take a hit, but they were able to raise prices and people still paid those prices. So that's good news for them. That's why you see the stock higher. Raise their dividend to $1.75 a share, and they're going to buy back $2 billion in shares. There you go. Twitter. In the news today, obviously for the known, we know what's going on there, but it's expected that overall that regulators won't try to block this deal with Elon Musk. There's some question about that, and it looks like that is not the case. UPS broke to new lows here today. UPS had earnings. Revenues are better than expected. They're technically classified as an industrial stock, but you might look at these guys as more of a darn near tech company. They are really heavy in the tech space there. They have AI-driven dynamic pricing. Really cool what they're doing there with that. They mentioned the word automate 16 times in their conference call there. Average daily volume fell to the low end of expectations, which is kind of a big deal because average daily volume is of all the crap that we buy online from wherever and have it shipped to us. Well, are we buying less stuff? Retail sales will give us that impact or import there in just a couple weeks, but that's big news for that. When you see that their average daily volume is down, they're just there. They're willing to ship stuff. Now, unless FedEx is over here saying, we stole all your business, or Amazon saying, we're getting more of your business, which hasn't been the case, then we might have a problem there. So you guys are maybe buying a little bit less stuff, which is good. Everywhere that you look inside of their earnings and found that there was some kind of sales growth, it was due to price increases there. So it really wasn't organic kind of growth in the traditional sense for them. Stock was a little bit lower. Sherwin-Williams up 9% there. Sales were up 7% for the quarter. They showed no signs of issues there at all. Sherwin-Williams beat on earnings, raised their guidance going forward, seeing all kinds of strength. Costs are in there as well. They mentioned supply chain issues and they mentioned inflation a handful of times. So that's an issue for them, but they were able to weather it and they got rewarded. Dr. Horton, better than expected earnings. They guided as expected. There was nothing really exciting here. Median price of a new home in the U.S. is now $77,000 more than it was just a year ago. It's good news for them. They're just not building as much. They're going to do a $1 billion share buyback instead of going out and expanding into other areas there. You'll find Chipotle, I believe, in the news after hours with their earnings, trading just a touch higher. Not a real big move for them. Earnings beat, but look, their costs went up. The only reason they beat on earnings is because they were able to raise prices. And that's, again, why you're seeing the stock up after hours. They were able to raise the prices by the level of inflation. I think they hit 6.5% was as much as they raised prices. And people were still willing to pay it. So that offset their costs, kept their margins basically in line. Pricing power. That is another way of looking at it. Honestly, I didn't even know. I went to Chipotle last week and maybe the week after. I just bought it. I didn't even know if prices went up. Think of the mentality of people that go into Chipotle. You're not shopping for a cheap meal. You just, hey, is it $10? Is it $12? You just somehow do it. They get me every time. All right, earnings tomorrow. You got Boeing, Discovery, General Dynamics, Humana, Kraft Heinz, Penske, Spotify, Seagate Technologies, T-Mobile, Amgen, Ford, Facebook, Molina Healthcare, PayPal, and Qualcomm. will be reporting there. I will take your questions if you happen to have any. I know I had a lot to say today, but, you know, we just kind of got through it. We did it. Oh, those burritos, yeah, man. I feel so good when I eat them, and then I nap so good afterwards, man. It's a good, like, Sunday meal. Oh, man. Shayna says, this is going to be worse than the Great Depression. Okay. I can't argue with that right now because I have no good reason to say that it will not. I'm not a bear, you know, by heart, but yeah. Yeah. Need to get used to prices, lower stock market prices. There you go. I saw a lot of people today saying, well, all right, well, you buy, go ahead. Market's falling. Don't you buy this? You know, in the short term, you dabble a little bit. Like in the office trades today, I can't get it loaded. There we go. Took a shot on GE, EWW, XLF, added a few other positions there, added one to gold, closed out Seagate Technologies, and rolled one of the Netflix positions there. So I get it, you know. You think that inflation is a little bit higher? Depending on where you're looking, you would be right. When the inflation numbers came out, I went through each category and showed you guys. There are some areas that, yes, very much so, more than the stated inflation rate. How to best play the 3 last days, day of the rest of the week by the dip tonight, Thursday and Friday. Yeah, I mean, if you're net long overall in your portfolio, you're just saying, great, hopefully this does work out and happens this time, and maybe we bounce a little bit. Yep. Tax religion. Dustin, how did the Twitter board just sell to Elon? Do the stockholders have no say? No, the board's there to represent the stockholders. So, no, you don't get a vote. No, you don't. You elected, essentially, if you voted, you would have elected those board of directors to represent you. And they represented the shareholders by accepting the offer. Yep. Netflix bottom, I hope so, but I don't have a reason to say that it's a bottom. It's a really tough one right now. I think people that say that it's a bottom are really just guessing and maybe, you know, get lucky, but I just don't know why it would stop here, you know? I think a lot of people hope it does, but why? We know what the rest of the year looks like, so any buying would just be dip buying for people that are exciting. So in order for that to happen, you'd have to have the market bouncing in a way where people say, I don't know what it is, I don't care what it is, let me just get back in, I don't want to miss this rally. We definitely don't have that right now. We don't have that mentality. Yeah. What do you think about adding to banks here with rates about to go up and price to book on all under? They are cheap, I will give you that, yep, on a number of different metrics. But they've also pulled back kind of sharply given where rates are supposed to go through the rest of the year. So it's almost like people are doubting that rates will move that high, which means people believe that the Fed talking so much about raising rates is actually going to bring down inflation. I don't know about that, you know? I think you're right to say having banks as a position is worthwhile here. Yeah. Oh, yeah. Need consolidation in the streaming space. I think it will happen as well, but I agree with you. Yeah. Because when people start asking, like, wait a minute, so I got to buy all, this is just the same as cable. Why don't I just go back to that? That's when you know somebody's got to work a deal with somebody. Yeah. Can you do a class on reading charts? I've done a couple of them in the dojo. If you're a research member or if you're a client, they're free. They're in there. You would search candlesticks. And then that would also guide you to a whole bunch more that maybe the topic wasn't on charts, but we ended up there. Yeah. You can vote for the boards, but who knows them? As a shareholder, that's your job. If you're interested, you don't have to, but yeah, that's your job, is to look them up, to understand what they want to do. Yeah. Tongue burrito? Yeah. I did not catch that comment about Wendy's patty. I haven't been to, have you been to Wendy's lately? I don't even know where. There's the one by our house. There's got to be. Yeah. No, I don't know. Nothing against them. I just too many other. You like Wendy's? I remember liking their fries, but yeah, you get to a certain age and you're like, ah. No. Oh, that's why. There's a Five Guys right next to Wendy's, so I don't even see Wendy's. I go right to Five Guys. Yep, that is definitely right. Well, I really need to have a thought about some of the things I eat. You know what I mean? Anyways, I better wrap it up there. Okay, so we'll be back tomorrow. We're doing the office trades tomorrow, 12:15, like we always do, and then I'll see you on the closing beat here. You guys enjoy the rest of your day. Let's see what happens in the last 3 days. We'll talk about it each day just to see what happens and follow along with the stats. It'll be fun. And we'll see you tomorrow. Adios.